I'm here with my teammate, Baxter Hines, the founder and chief investment officer of Honeycomb Digital Investments. My name is Toby Loftin. I'm the director of strategic relations for Honeycomb, and we're here to talk about crypto. Baxter, why crypto? We've seen this stat of 70% of investors who are now invested in crypto in 2021 weren't invested at the beginning of the year. So what's driving the enthusiasm?
Well, the growth has just been phenomenal. And I look at this wave of growth and innovation very much like I do the internet when it came around. So when I first started getting into the financial industry in the late 1990s, the internet was coming into full effect. People didn't really know what it was. They knew it was sort of these computers talking to one another, but they didn't really know how to use it or what it was gonna do. But looking back on it, it's very evident just how transformative the internet was. And I think we're going through a similar type of wave with blockchain. In fact, if you look at a chart that shows how people have adopted blockchain and overlay that with how people got onto the internet and started using it, basically the same image. So I think that trend is going to continue, and you're going to see this just exponential rate of growth in blockchain use over the next many, many years. But to break that down even more, it just comes down to simple adoption. More people are using it. As I said, that should continue to grow. And one of the reasons people are using it is because the infrastructure is getting so much better. So back in the day, if you were going to buy crypto, say in 2011, you ever gone to a park in San Francisco, and you find somebody who's got a little bit of Bitcoin on a memory stick, and you give them cash, and maybe you got the crypto, maybe you didn't. A lot of frictions there that have been alleviated as world-class companies are starting to offer cryptocurrency. So now you can use PayPal apps to buy and sell crypto. You've got Coinbase now has more accounts, I think, than Charles Schwab. Fidelity started to custody BitGo. So more infrastructure, that means more usage. It also means more value to the crypto. So let's take kind of a parallel. If you had a piece of land that had been undeveloped, that's worth something, but it's worth a lot more if you get a road built next to it. It's worth a lot more if an international airport gets built close by. So I think more infrastructure is going to continue this trend of growth for blockchain. And then the last thing that I would mention is that regulation is becoming more clear. Everybody fears the unknown. Well, regulators are starting to take notice of what's going on with blockchain, and you've started to see all over the world in some of the highest halls of power. The powers that be are deliberating what do they want to do about crypto. They're talking about the dollar going onto the blockchain. They're about what do you do with Bitcoin? How do we tax it? How do we regulate it? And so that's discussion is ironing out in a lot of ways the future of crypto. And so that's reducing some of the uncertainty around it. And I think that will continue just like it did in the internet back in the 1990s.
So adoption, the infrastructure, and regulatory clarity. Well, for those that are wondering, like what underpins the value of the actual cryptocurrencies? Like what makes it valuable?
Well, I think just like anything, the utility that a good or a commodity provides is what derives its value. Just like the reason we buy oil is because oil can be used to put you on a plane and take you from one location to another. It can be used to heat your home. Well, how can we say the same thing about crypto? What we're seeing is that crypto is creating this better, faster, cheaper way of doing business, and it's creating solutions for real world commercial and economic problems. Take just Bitcoin itself. What's valuable about Bitcoin is that you can transfer value from one person to another without having to use a third-party intermediary. So let's say if I were going to give you a check for payment, you've got to take that check to the bank. It's got to clear your bank. It may take you 3 or 4 days to get the value. If I were to send you Bitcoin or cryptocurrency, it happens right away. If it's a record, I don't have to have a third party take a cut out of it like I would if, say, we went to a restaurant. When we pay the bill, somebody's got to pay the credit card company. You don't really have to do that with blockchain. So that's very useful. But it's now more than just payments. We're now starting to see all kinds of ways to manage IT solutions. So you think file storage and Internet of Things, trading data around on the blockchain. You're seeing financial products coming out. You've probably heard of DeFi and tokenization. There are all of these new use cases that are coming around. People are, again, realizing that there's this better, faster, cheaper way of doing business. And as the transaction volume within blockchain continues to increase and becomes more widely adopted, the value of the crypto should go up.
Yeah, with the network effect. Yeah. Well, so how do you get exposure? Like what would you tell a new investor to the crypto space?
I would say start small. One of the things that spooks people is one, how do they get it? That's why where we come in, we've got an institutional grade type of offering of crypto in either an SMA platform or through a private fund. So that's the first thing I would say. But then in terms of how much should you allocate to crypto, people say, well, it's volatile. How much should I put into it? Well, what we've seen are a lot of empirical studies that say if you have just a small allocation, somewhere between 1% to 5% of your portfolio in crypto, that can create a much better risk reward trade-off for your overall net worth and your overall portfolio. Crypto has sort of this asymmetric upside potential to it. So having a small position gives you exposure to that upside. But if you keep your position size small and the volatility comes into play, let's say you have 2% of your money in crypto goes down by 50%, which it can do. You've only lost 1% of your whole net worth. So I would just say get into the game, take advantage of the fact that crypto is low correlated with other asset classes. It has a hedging effect. And we see that inflation in other countries, what do people do in places like Iran, Venezuela, Turkey? They put money to Bitcoin because they don't trust their home currency anymore. And then also just that whole capital appreciation factors that we talked about earlier with the growing demand and a fixed supply. We look for cryptos that are scarce and have utility. I think there's a lot of the ingredients are all there to see more years of growth in the value of cryptos.
Well, thanks, Baxter. Well, if you want more information, please check out Baxter's book, Digital Finance, published by Wiley, and also go to the website, honeycombdigital.io. We look forward to seeing you.